Hey, it's Ed here. Today we're taking a look at technical analysis for Dow Jones with Elliott Wave Theory. Before getting into the analysis itself, I wanted to let you know that I have a Patreon where you can find Elliott Wave's basics course, access to weekly live streams and more. Thank you for your support. Let's get into the analysis next. So starting here on 4-hour time frame, checking out the higher time frames first. So overall idea, main one is that we have this as a three-way structure into the lows of June, then three ways up into as an A into the highs of August, three ways back into B as in September lows, creating this expanded flat as in the form of wave X. This is very good looking. This was something that I was expecting on the other indices where we would be taking out these lows as we had taken out these lows as well. Taking out these highs as we have taken out these lows to create that expanded structure, but the Dow Jones was the only one that was able to do it. So this is still on the table. This is my main scenario this way, where we have already pivoted from here, and this would be the lower time frame count. Let's check out on 1 hour, where we had this as a 1 2 1 2 3 4 5 3 4 and 5 into these highs. Not the best count, not the best subdivision here. However, we would have alteration against this wave 2 here, and same with these wave 2 and 4 are substructures of wave 3. The pump that we had here, however, does not provide us divergence here, which is a bit sad. On the lower time frames, we do still have the divergence on 4 hour from the thirds of third against the end of fifth. Again, this would be having an extended fifth as a potential, having this as a expanding diagonal. That's the only way I can fit a 5-way structure in here, so that's the way I'm going to go with. We missed a couple targets here for the 1-to-1s. Actually, let's see. I think we just barely missed it on the 1-to-1s, but it was close enough, and now we are coming down. The other scenario instead, because again, the structure after this point here was very impulsive to the downside. I think this looks as a best structure that we have had for quite a long time. Looks the best as a 5-way structure. So either, again, this is the start of something. In this scenario, if it's the idea where we have completed a structure of this wave C up into these highs, now we would be having a continuation to the downside per the higher time frame trend, which is again the wave Y of this intermediate structure. But of course, there is the other option where this is not the start of something but an end of something. So let's take a look at that count as well. So instead, we could be still having this as a 1 2. The same structure here is a bit different as substructures. Wave 1 2, we would have to have a basically invisible 1 2 3, invisible 1 2 here before this third wave, fourth wave, fifth wave, fourth wave and fifth wave. We have overlaps here, so this is where we would have to have the thirds and fourths if we have this as a impulsive wave structure. But again, that would be giving us a third up in these highs instead of the previous highs. Again, if we had the third wave in here, we could not really have it this as an expanded structure, because again, if we would have this as a 3-way structure like so, as the first wave of that of this larger degree structure, this goes well beyond the 1.618, which is something that I don't allow. So that's why we would have to move the wave 3 up in here, have this as the wave A, B and then C. Now we wouldn't get past the 1.618 retracement of this A wave and still have this as the potential C wave. Now this is a good count in that scenario where we have actually an invalidation closer. On the other count that we were looking previously, we had the basically these as the highs as an invalidation for the structure coming down, if we wanted to play it as a start of something here. Now with this scenario, we would be still looking for this fifth up higher. I don't think this is as likely as scenario as the other one, so keep that in your mind. If we had to still label this as the potential end of wave 4, we would be labeling this as potential wave 1. This definitely is more overlapping here than anything else. I don't see this as bullish as it should be. This structure here looks more like a 5-way structure than this. At least it is more impulsive. It took this structure or this price down faster than we had, climbing it, making it more likely that this is a continuation to the downside. However, this structure has been very sideways in this nature. If I was the market maker, I would be looking at where do we have most, again, liquidity. These tops for sure, these lows here plus these two lows. So that is where the liquidity is, and that is something that I would be looking to take before I want to head one direction or another. So if we were to be coming down, we would invalidate this count. We wouldn't be able to take both with this count out. And why is that important is because, again, it invalidates this count. So in this scenario where we had the impulse wave topping up in here, let me label these guys back in here. This would be a wave 1 of something down here. So this would be a wave 1. We would be looking for wave 2. And in this scenario, we could be labeling this as a wave A or something else. Again, these all are very three-wave-ish structures, but we are in a very sideways structure, so we can't really say what this is all around. So at least until one of these structures breaks these lows or these highs, I'm still staying in the sidelines at the moment because I'm expecting us to take one side of the liquidity first. My preference would be that we would be taking out this low, these lows, taking out these lows, invalidate the other count that we had where the fifth was not done, and then we would be shifting our bias upwards, taking out the liquidity that we have here, get stuck on some of these order blocks that we have here, and then roll over again. That way we could accomplish the idea of taking liquidity from here, taking liquidity from here, and then move on with the trend, which was again started from here. So that way the market makers could make and take all the liquidities, all the stop losses that people have here while they are trying to scalp this range, and definitely would be something I would be liking to get short on here. I'm definitely looking for long setups here as well, and I feel like this is pretty similar to S&P 500 and Nasdaq as well. On S&P 500 we had the possibility of having a triangle in here as well, but that is basically the same thing as in here. It has a bit more clearer stops, just based on the triangle strategies that we can have. But I think this is the main scenario I'm looking for at the moment. Hopefully I was clear enough to explain what that was. But I think that is the end and all of the information I wanted to pass on to you on this video. If you made it this far, again, I would appreciate the likes. Link to my free Discord server in the description below. And for now, I thank you for watching and see you on the next video. Bye bye.